You've got the admit. You've also told your friends and family, maybe even celebrated a little. But now comes the stressful part. How are you going to pay for your MIM? It's a question that every student asks. And between tuition, housing, visa, and daily expenses, the numbers can get pretty scary. But the good news is there is always a way if you start early. In this video, I am going to walk you through everything. Scholarships, loans, and real-world budgeting tips. If you have received your admit for Fall 25 or are expecting one soon, this guide will help you stay financially ready. Now let's start with scholarships because free money is always better than borrowed money. So, most MIM schools offer merit-based scholarships and some even have funds for financial need or regional diversity. But here's the truth, most students either apply too late or don't know how to write a strong application. So let's fix that. Okay, first, merit-based scholarships. These are awarded for things like a strong GMAT or GRE score, academic consistency, or leadership. For example, London Business School offers multiple awards up to £8,000. HEC Paris has the HEC Foundation Excellence Scholarship, which can cover a big chunk of tuition. INSEAD has over €1 million in scholarships available for MIM students each year. Now, ESMT Berlin even gives a €5,000 award for high GMAT scores, usually above 700. So, if you have got good scores and a solid internship, this is your moment to shine. Second, need-based scholarships. These are for students who genuinely need financial support. INSEAD, Ivy, and even LBS have a limited number of funds that require you to submit income proof, family bank statements, and a short financial essay. A lot of Indian students skip this because they feel awkward about sharing financials. Don't, please. If you have worked hard and need help, ask for it. Schools want a diverse class and these scholarships are designed for students like you, right? Now, third, regional and diversity scholarships. These are often provided by external foundations. You have probably heard of names like Aga Khan Foundation, Narottam Seksaria, JN Tata Endowment. All of them offer funding for Indian students. Some are interest-free loans, some are partial grants, and while they may not fully cover your tuition, they reduce your loan burden and give you more financial flexibility. Here's a quick tip, apply early. Most scholarships are first come, first considered. If you wait till round 3 or round 4, trust me, most of money is already gone. I've seen brilliant students miss out just because they delayed submitting a 500-word essay only. So go back to your admit portal and check if there are any scholarships still open. If yes, apply it. Now, let's talk about loans because the reality is most students will still need some form of loan to cover the full cost, right? And you have options. Indian banks, NBFCs, and international lenders. Let's break them down. Indian public banks like SBI, Axis, and Bank of Baroda offer education loans at around 9 to 11% interest for amounts above 7.5 lakhs. They usually need collateral like a house, FD, or insurance policy. The benefit is slightly lower interest rates and moratorium periods during study time. The downside is that it has a little slow paperwork and limited flexibility. NBFCs like HDFC Credila, Avance, and INCRED are faster. They approve loans within a few days, don't always ask for collateral, and allow flexible repayment structures. But they come at a slightly higher interest, usually around 11 to 13%. And sometimes partial EMI payments start while you are still studying. So read the fine print before you sign, right? Now let's talk about international lenders like Prodigy Finance and Empower. Prodigy offers loans in dollars, euros, or GBP. No cosigner, no collateral. They partner with schools like NCR, HEC, LBS, IESE, and ESCP. Interest rates are around 9 to 12% depending on your profile. Empower is US based. They offer loans for North American schools and also support students with scholarships, visa prep, and resume help. So, how do you choose between Indian versus international? Simple. If your family has collateral and you want low interest, go for Indian public banks. If you want speed and flexibility, NBFCs do make sense. And if your school is partnered with Prodigy or Empower and you do not want to involve your family particularly, go international. Just remember, international loan EMIs start almost immediately after graduation. Indian banks usually give you a 6-month grace period. Alright, now let's talk about budgeting, because getting the money is one thing, using it wisely is another. Most students we have worked with spend 5 to 7 lakhs more than they planned just because they did not budget correctly. So here's how you do it. Start with tuition, that's a fixed cost. Check if your school wants full payment upfront or in installments. Then calculate living costs, rent, groceries, transport, utilities, phone bill and weekend expenses. If you're studying in London or Paris, expect 1.2 to 1.5 lakhs per month. In Germany or Spain, it's more like 80,000 plus. Add flights, visa costs, GIC if you're going to Canada, and initial shopping for clothes, bed sheets or kitchen stuff, right? Now, do add a buffer. Always have 1 to 2 lakh emergency fund. Trust me, it will genuinely save you during those unplanned expenses from, let's say, lost passports or last minute travel or health emergencies. Once you have made this budget, decide how much comes from personal savings, how much from scholarship, and how much from loans. That way, your finances are clear before you even step on the plane. Now, here are some smart saving tips. Cook your own meals instead of ordering out, share housing instead of going solo. Please don't buy new. Check Facebook groups or student communities for second-hand furniture or electronics. That can be really helpful. Use student discounts for metro passes, museums, software, and even Spotify. And finally, use a good money tracking tool. Revolt, Wise, and Neo Global let you pay in local currency, avoid exchange fees, and track your spending. I always tell students, if you do not track, you will overspend. Simple as that. To wrap this up, if you want to pay for your MIM smartly, start early. Apply for scholarships before the deadlines. Research loans. Compare terms and do not sign anything without reading the EMI clause. Create a budget and stick to it, and build a small buffer fund so you are not stuck in the middle of the month with 500 rupees in your account. That's it for today's video. I have linked some of the best scholarship databases, loan providers, and etc. in the description below. So if you want a one-on-one help figuring out your financial plan or want to discuss more things about your admit and how you're going to stay there, drop a comment or use the link to book a call in the description. Like and subscribe if this helped, and I will see you in the next video. Bye bye.